Hello, and welcome back to my YouTube channel. James here, as ever, for today's ACCA Advanced Taxation P6 exam video, where we're going to walk and talk through a review of what came up on the December 2022 examination. And I am in the right company today to go through those key questions that came up that could help you with your future examination, because I have Richard Poole with me, who is a top tutor in advanced taxation. So Richard, feel free to introduce yourself, my friend.
Yeah, so I am now offering advanced tax as a kind of online on-demand product, and sort of since 2016. Prior to that, I was sort of at Kaplan, FTC, etc. Since 2006. So on the 1st of Jan 2006, I joined Kaplan. So it's going to be nearly 16 years or so coming up on my anniversary. So I've been teaching this a long time.
Brilliant stuff. I mean, the students who have got advanced taxation or are thinking about it, this is going to be really helpful for them, because you teach students advanced taxation and we can sort of walk and talk through your experience of the exam, and also a sort of little debrief as to what came up in the December 2022 on there. So where do you want to kick us off? So the students are there, pen and paper, Richard, what we're going to get down as some keynotes.
Yeah, I'm just gonna caveat a few things first of all, which is obviously I'm doing this having not seen the paper. We're quite soon after the exam, and there's obviously
Mhm.
these days an AM and a PM exam, and so what I'm basing this on is what my students have told me came up. Sometimes I'm missing a bit of context, but I can certainly, until I see the exam for myself, I can pretty much guess what the context would be roughly.
Mhm.
So it's based on feedback. And I think one thing I'll just caveat before I go into specific areas is a few things I hear students say are things like, um, you'll often get feedback of it was a hard exam, it was a hard question, I didn't know where to start, okay,
Mhm.
on a particular question or whatever. And I just want to say on those three statements, hard exam, hard question, didn't know where to start, that we've got to, what I'm going to hopefully do here is explain that that doesn't matter. Okay, there is no such thing as a hard exam. There is no such thing as a hard question if you know where to
Mm.
where to effectively start. And a big focus is on sort of explain before calculate. And so when students send me topics, it doesn't really matter whether what they're saying in terms of the actual the detail of what was in the question. What I always say to my students is, can you say three or four things about a particular area?
Mm.
So the way I'm going to attack it is I've been sort of 11 big areas came out from what I was sent, and I'm sure there
Okay.
were more if you sat an AM or a PM exam, and I haven't necessarily had that feedback. But what I'm going to say, so try and do is explain those 11 areas and say, here are the basic things that you could say about those areas.
Mm.
So it was a typical exam. The general theme across the two, of course, is there was a bit of unincorporated stuff. So running a
Okay.
sole trader partnership style business. There was a corporate question and sort of a corporate slant on groups, etc. And then there was quite a lot going on with regard to the capital taxes, as you'd expect at this level,
Yeah.
with regard to a bit on inheritance tax, a bit on capital gains tax. And so the first area that I'll pick out was out of the corporate question, which was about trading loss options. So
Okay.
again, I always find when I teach this and when students look at questions, they think they have to get the right answer, but actually the right answer in terms of the numbers is irrelevant. What's important here is if you put yourself in the shoes of a client, what do they want to know? They want to know what the advantages and disadvantages are of each claim and be given a general recommendation. So under that particular umbrella, I would have expected students to be talking about um, you can do a current year claim, so you can relieve against the current
Yeah.
year, you can carry back,
Yeah.
you can carry forward. And again, without knowing the full context for now, if it was a cessation, was terminal loss relief available? And sort of some recommendation of the advantages and disadvantages of each one, because the thing about corporation tax, it's been 19% for a long time, and that's
Mm.
continuing now from an exam point of view. At least what happens in the real world may be different, but from an exam point of view, it's still at 19%. And so the key thing is actually, the saving of a better rate of tax isn't really a possibility anymore. So it's more a case of cash flow. So of course,
Mhm.
current year carry back is going to mean you can get a refund of tax. Carry forward is of course a slower way of getting the relief, but may be advantageous if, for example, you've got more profits in the future. And one of the big things with trading losses is the fact that You can use losses if you think about a group scenario that I'll talk about later, to effectively take companies out of the installment scheme and things like that. So
Yeah.
that would have been my advice there on the trading loss options, is just talking about the basics. So when you say it was a hard question, yes, getting the perfect answer was probably near on impossible. But did you say you can do current year, you can do carry back, you can carry forward, etc.? There's kind of 4 or 5 easy marks. I didn't know how many marks it was for, but there you go. That would have been, and then some kind of recommendation as to which one, what in the context of the question would have been.
Yeah, considering all the variables, and also really good point in there is just pick up on the easy marks straight away. Tell the marker as if they're a client. You understand the concepts, and then we're applying it back to the scenario what was given on there.
Absolutely, absolutely.
Spot on. So what are we thinking for the next area?
So the next area that came up was VAT. So again, it may not have been on your exam depending on AMPM, but fundamentally VAT sounded like was there in the form of VAT schemes and a general chat about VAT. The one I was told about was kind of comparing the advantages and disadvantages of different types of scheme. And so again, they're just like with the loss options. Can you say what the limits are to join them? Can you say roughly how they work? Can you say what the advantages are cash flow wise versus administration wise? Because each one has a different one. So what I always say to my students is have 3 or 4 points down about these classic areas, even if you can't get into that level of detail. Just at least be able to sort of say the basics, and always whenever they say compare this or compare that, like with my loss point a minute ago, have a recommendation at the end. That's really, really important.
Spot on. Yeah.
So yeah. So that was sort of that in terms of the VAT schemes. But again, sort of going forward, a bit of advice to students is again, what scheme they were talking about in this exam. Yes, that's important for this exam, but going forward, have a note on how the cash accounting scheme works, how the flat rate scheme works, how the annual accounting scheme works, and just things like the limits, how they work, and why you would choose that particular scheme. So that would be my kind of takeaway for future students doing future ATAX exams.
Yes, and that's always, it doesn't really go over 10 marks, does it? It sort of floats around the 5-ish, doesn't it?
That's
but,
right.
But still, it's 5 marks in the bank if it comes up.
Absolutely, absolutely.
Right.
And the third area that came up, which is an absolute classic, is ethics, as we'd always expect, for around about again, like the 5 marks, like you just said on the VAT. But there's always the same drill to go through with ethics. I'm not underplaying how fundamentally important this area is. It's so important for all accountants. But the one I heard about was a refund from HMRC that had been received by a client. This was in one of the exams, and they were sort of not happy to disclose they'd been paid this in error. So again, any ethics question goes down fundamentally 3 points. You say, what fundamental principle is being affected? Well, sounds like if a client isn't going to pay it back to HMRC, there's a kind of integrity issue.
Yeah.
Why is that in the question? That's when you then say, well, this is because X, Y, Z in the question. Make sure you apply it back to the question at this level. And then fundamentally, what are you going to do about it? What are your actions? Talk to the client, talk to, document throughout, say what you've recommended, say it's unethical, etc. So, when you're thinking 5 marks, I've probably named 6, 7, 8 there. So if you're looking for a pass, you're looking for 2.5 out of 5 on an ethics question. So just naming one fundamental principle, why it's relevant to the question for 1 paragraph, 2 to 3 lines each time, and then what action you're going to go through. There's your pass, 3 out of 5. So
exactly.
Again, people overcomplexify ethics by trying to get into the detail of this particular scenario, and that's important, of course, to get the 5 out of 5. But to get a 2.5, 3 out of 5, just do that every single time. Principle, question, action,
application. Exactly. And if you haven't already, do your ethics and professional skills module before you do your advanced taxation paper.
Absolutely.
ACCA always bang on about it that students who have done it are more likely to pass. And it still staggers me how many students just leave it to the end, put it off, but it's embedded within the examination. So maybe pop that down in the notes as a call to action after this video as well.
Absolutely. Or worse than either of those two, James, don't attempt ethics at all. That's just the easy low-hanging fruit there, isn't it? So
exactly.
yeah, absolutely.
So what are we thinking of the next topic area?
So resident classic ATAX area came up. It sounded like there was a kind of comparison between sort of UK and non-UK. But again, you know, if you're thinking about residents at a high level, what does a student need to know in future exams? They need to be able to talk about what makes you UK resident, and there's a set test out of 3 to
Yep.
say that. What makes you non-UK resident? And then if you fail to decipher what the client is by that point, then you've got to go into what are called the ties test, and
Yeah,
you've got to
exactly.
understand what the 5 ties are.
Hmm.
And but it sounded like in the context of this exam, what they went into was slightly deeper than those 3, which was the split year treatment. And it was the idea of someone who was going to be employed overseas for 3 years,
Hmm.
and therefore normally in most resident scenarios you end up either UK or overseas resident for the whole tax year.
Hmm.
One of the few occasions where you can split a year into literally the date you leave the UK is that class. There are other scenarios, but the classic one you see in ATAX is someone either leaving or coming back into the UK. And when that happens, effectively, you're then able to say the split year treatment applies, and you'll fundamentally be resident in the UK until this point. Once you leave the UK, then effectively you're resident in that country. But again, the crucial thing here was to know, one, the split year treatment existed, and 2, why it was relevant in this question. That's what they were asking. So it was a recommendation point that, again, if you just knew the basics on the split year treatment, you would understand that someone leaving the UK would be a classic example of that being triggered, and the fact you can then carve a tax year up, which isn't normal treatment in most scenarios.
And again, just to add to that, you've also got the number of days. They're also given in the tax tables as well. So a
Absolutely.
well-prepared student, you can lose out on time by thinking, oh, how many days is it? Which ones it fall into? So it's just
Yeah,
all these little triggers will help you out when preparing for your next advanced taxation exam.
absolutely. Absolutely. And then sort of under that umbrella, I suppose, domicile is a classic one. I haven't heard it specifically mentioned in this scenario, but again, the 3 steps of domicile, understanding that someone, again, sort of thinking about when your where your domicile of origin is, so where you're actually born, where your domicile of dependence is, which is sort of you sort of follow your main dependent around until the age of 16, and then you can make a domicile of choice. So at least just getting down the basics of domicile. And of course, a few years ago, there was a change in the definition of being deemed domicile, which is where residence and domicile cross over. So effectively, when you've been resident for a certain number of years, but yet you're continuing to, in theory, remain non-UK domiciled,
Mm.
why wouldn't HMRC at some point say to you, I think you are actually domiciled in the UK, which is what the reason for being deemed domicile is, that a certain number of years of residence, etc. That's one of the scenarios makes you deemed domicile. Okay, so again, just understanding the different 2 or 3 scenarios that make you
Mm.
deemed domicile is so important.
Yeah, and just try to picture. I remember doing my advanced taxation exam. Just try and picture maybe the country they've given it, or what's happening in the scenario, the number of days they're traveling. It's all these little things that can just help you to just get it down on paper, or on the computer, should I say, with the correct answer, just showing all your steps and your logic behind it.
Absolutely, absolutely, yeah. Um, and again, sort of on the line of domicile, the next area I'm going to talk about, I think this is the 5th area now, would be inheritance tax generally. So
Mm.
there appeared to be quite a heavy, as you would expect, capital
Classic.
tax slant.
Mm.
Yeah, and again, I just think sometimes, yes, inheritance tax gets really fiddly and really complex, but there's a lot of scope to just state the basics, the
Mm.
understanding that there are 3 key stages in inheritance tax. You've got the first stage, which is lifetime tax, is only payable on things called CLTs, which is basically things that are transferred into trust. Then second one, you've got death tax payable on both CLTs or pets that occur in the 7 years pre-death. And
Hmm.
then you've got the death estate, and just spending some time sort of for future reference for students to actually think, do I understand what happens in the 3 steps? Not can you get all of the numbers perfect? I understand inheritance tax is challenging, and spotting all the reliefs and all this can be really hard, but
Mm.
just knowing the basics of
Yeah.
what's trigger step 1, what's trigger step 2, what's trigger step 3.
Yeah,
That would be
and
my main thing there.
dates as well.
Yeah,
Dates, exemptions, taper relief. Everyone has a different process. You just got to work
absolutely.
out yours.
Definitely, and you're right. It's very formulaic in some ways in terms of how you actually lay it out, James. And just having a little pro forma for each of the 3 steps and saying,
Like
you
you're
know,
in.
taper relief always applies here, annual exemption always applies here, etc., etc.
Yeah, exactly.
Definitely.
It's all flooding back to me now.
Yeah.
Yeah.
Yeah. And I think the sixth one I'm going to talk about is inheritance tax and capital gains tax relief. So you just mentioned one there a minute ago, James. But in terms of this, I always say to my students, and yes, again, it can get fiddly with the numbers, and this is why I always tell my students to kind of explain before they calculate. But in terms of the reliefs, just get some cards written down, particularly for CGT, where there are a lot of reliefs, you know, rollover relief,
Mm,
BADR, gift relief, incorporation, the list goes on. Just have something down that says, is it a deferral relief? Is it an exemption relief? And effectively, what are the conditions for that particular relief and what qualifies for it? Because one of the examples that was given in this recent exam was there was a gift of an office, and the
mhm,
question was asking, did it qualify for gift relief? Did it qualify for business asset disposal relief? Now,
mhm,
that is literally a case of doing what I always say to my students, which is for every relief, have something written down that, you know, a classic example of rollover relief is land and buildings. Oh,
mhm.
okay. Well, they didn't ask rollover relief in this particular example, but knowing what the assets are for each relief is so fundamentally important. And that would have been low hanging fruit, easy marks for someone who knew the basics of the CGT
Mm.
reliefs. And again, the inheritance tax reliefs go in there as well. What hasn't been specifically mentioned to me, I'm sure it was there somewhere in the exam, but in terms of inheritance tax, certainly just the understanding of there aren't many. You've got kind of business property relief, agricultural property relief, but effectively the basic rules on what gets what and what you need to effectively be giving away, whether they're applicable to just death, whether they're applicable to life and death, etc. You know, so I'm making it sound very straightforward. And I'm not trying to do that at all, because I know just how hard this is from when I was learning. But my point is, I try to simplify it by saying the more of these kind of crib cards you can have with 3 or 4 little bullet points on them without a load of detail will just really help in terms of at least explaining the
Mm.
reliefs, even if you can't do the numbers.
Yeah, exactly. And we're talking just quite chattily over here, just saying, oh, we just shift from inheritance tax
Yeah.
to capital gains tax. But that's some of the differences between passing and failing that you've got to get comfortable by going, right, question 1, income tax. Then we go on to corporation tax. So those little cards, I can maybe link it down below. I'll put it in the comments. I used to use them all the time with flick notes. Absolute lifesaver on there.
Absolutely. And you're absolutely spot on, James, because what they did in this exam was they made a comparison between inheritance tax and CGT reliefs. And again, if you were shaky on your foundations of what is a CGT relief, what is an IHT relief, that would have been really challenging for many
Mm.
students.
Yeah,
Yeah,
along with the time pressure of the exam, and then already having probably an hour and a half, 2 hours in, and then you're getting flooded with this as well.
absolutely. I suppose my seventh area is group relief. So again, it can get quite technical, just like with trading loss relief. When people say it was a hard question, what are they actually saying to me? I didn't get the model answer. I didn't get the right answer. All these things that actually are not that important for passing a question. To win a prize, yes, absolutely. You've got to get it not far off spot on. To pass it, you've got to do the basics well. So again, just having a card under the umbrella of kind of relief, sort of from a group corporate scenario, just what's a gains group,
Mm.
what's a loss group, what's a consortium, and the related conditions of, you know, I need 75% direct
Yeah.
relationship here, and all that stuff. Just having a card for each of the different types of group, and then understanding what the impact of it is. And that's when you start to score marks. So advanced taxes, having defined them, what's the impact of a gains group? Well, you can make nil gain, nil loss transfers between the companies. What's the downside of that? Well, if one of those companies leaves within 6 years, then they're going to have what's called a degrouping charge, which is the gain that should have occurred on the day they left the group. And again, that's your kind of gain slant on it. But if you then create something around loss groups, as I mentioned earlier, loss groups are whereby you can share trading losses rather than capital gains. And the big thing these days is because it's all 19%, even if you've got 500 companies, they're all paying 19%. Effectively, the thing is, can you get any of these companies out of installments? And that's the key thing to then understand under the kind of impact of what type of group you are in. So sort of said a lot there. Two basic takeaways are understand what a gains group is, understand what a loss group is, then understand the impact of those two types of group.
Spot on. Yeah. And even just think practically in the exam that yes, you're on the computer system, but if you're in a center, you do get a scrap piece of paper. Some students like to just draw the structure down so they can actually physically see it as well. Whatever works best for you, because then that is going to help you get that answer down crystal clear.
Absolutely. Absolutely. And then quite a few quite specific areas I'm going to finish with because they were mentioned. And I know students often worry about, again, I'm saying the same thing each time, getting the right answer rather than just getting the basics down. So CFCs were mentioned, so controlled foreign companies. Not sound too patronizing, I'm just going to say that slowly, right? Controlled foreign companies. So that simply means a company that is controlled from the UK, but is based overseas. Now, again, you can get bogged down in the legislation, but just think about why HMRC are bothered about that type of company. So it's a company that fundamentally is controlled by UK shareholders, but is making money in another country. So why wouldn't HMRC want some tax on those earnings? And so again, CFCs is about, first of all, just like I've said with everything else, define it. What is it? You're going to get marks for saying it's controlled from the UK by either, and you need to understand who it has to be controlled by from the definitions. But again, have that on a card. It's controlled from the UK and it operates overseas. That's already a couple of marks without even looking at the question. There are some exemptions of when HMRC aren't going to say they're a CFC. So again, let's just think logically about what I've said. HMRC are concerned about not getting the tax. So when wouldn't they be concerned? Well, if you're paying at least 75% tax in that foreign country, well, okay, HMRC will let you off on that. That's a kind of an exempt type, et cetera, et cetera. So there's 5 exemptions you need to learn of when CFC legislation doesn't kick in. And then, okay, if you do then go through all of the hoops and you say they are a CFC, you need to understand that HMRC are going to want some of the tax from that controlled foreign company. So just a card that defines it, says what the exemptions are, and says how effectively it's going to get taxed if it does become a CFC. Just keeping it nice and simple.
Spot on. Yeah, specific area. And what was the next one that got thrown your way?
So share buyback. So buying back of shares, a very specific one. But again, what's going on here? We've got an idea whereby a company, when it wants someone to own it, it effectively issues shares. So of course, small companies may not want their shares out in the general public. So it may not be an option that if I'm a shareholder of a company, that I'm just allowed to sell my shares to any random person, because maybe that family, if there's say 3 people, don't want a random person from the general public sitting on their board. So the reason you get into a share buyback situation is because that company says, rather than selling them to the general public, we will buy those shares back off you so that effectively it's kept within the company. And again, there are 2 ways of dealing with this. You've got the capital route, you've got the income route. What you need to understand is there are very set conditions to be able to satisfy effectively the capital route. And you need to know what those conditions are. So again, there would have been a lot of credit there. Yes, you may not have been able to get the numbers on that area, but just to explain that this is why it happens. Here's how the capital route works. Here's how the income route works, and sort of how it operates. Well, the differences between the two, and of course the fundamental difference is the person who's giving the shares back either ends up capital route wise with some kind of gain, or income route wise, I'm keeping it very simple here, it's slightly more fiddly than this, but some kind of dividend. And the question then is, which one would that person prefer? How are they going to get taxed on those 2 distribution? So the simple takeaway there is just know the difference between your capital route and your income route.
Yeah, I mean, it's all flooding back to me of all those hours that I used to do reading the technical articles on there, where exactly what you're talking about here. If you're struggling onto these specific areas, have a look on ACCA's website. Again, I can link it in the description below. just go through it, read it through, and then pop it on those little cards, on those notes, in your own words. Best thing I would do if I was in the student's shoes.
And that's crucial what you just said there, James, in terms of in your own words. I think there is a risk that students think by going through and highlighting whatever study material they're using, they're taking it in. And that may work for some people if they're a very visual learner or whatever. But from my experience, most people need a little bit of a mix of how they take information in. And certainly I was very kinesthetic. So I would spend a lot of time on the tuition phase, rewriting questions, rewriting stuff in my own words. And I think once it's in your own words, you become slightly more in charge of that being your problem rather than just having highlighted something that someone else has written. So what you say there is really important to kind of almost take ownership of what you've written down is so key.
Yeah, fantastic. Is that all covered on all the areas? We've got one
I've
more.
got two more actually, James. Two more. I didn't want to disappoint you. So two
That's
more,
all
number
right.
10 and number 11. so SSE came up. So substantial shareholding exemption. And again, this is one where one company has some shares, they're selling shares in another company, and there would have been loads of marks. So there are typically loads of marks for saying you have to have owned the shares for at least 12 months out of the last 6 years, and you have to have held at least 10% for those 12 months out of those last 6 years. If that is the case, as long as there's certain rules about whether the companies have to be trading, which I'll leave you to look up, but fundamentally it allows the company that's selling the shares to be able to gain an exemption on that gain when they are selling their shares in another company. So again, the phrase you're looking for in the exam is one company sells shares in another company. When you see that phrase, you've got to be thinking SSE, even if it's not available, at least to state, here's the conditions of SSE. In this case, it is not available because they put some micro detail in about one not being a trading company or something.
Nice.
But yeah, just getting those basics down is so key.
Cool. And we've got just less than 2 minutes to go. So
Okay,
we'll get us through the last one. Let's do it.
Yeah, branch versus subsidiary. So I wrote an article on this in May 21, and the heading of it summarizes me. Right, you can find it quite easily on either the PQ and PQ magazine or on the issue app, ISSW. May 21, I called it more discussion, less data. It's a May 21 article, and it was about the differences between a branch going overseas and setting up as a branch or setting up as an overseas subsidiary. And my article sort of summarizes the key differences there. So that is an absolute must read. When someone said that had come up, I've told my students 100 times to read that article. So that would have been lovely for some students.
Rock and roll. Well, as I said, I'll make sure I link all your details down below, Richard. And thank you so much for all the insights today in the video. I'm sure students who've got advanced taxation, I've got so much out of this video. So be sure to give it a massive like, guys, and also subscribe so you get to see Richard's other videos that we've uploaded onto the channel. And leave us a comment at the bottom how you got on in your exam and how you're going on in March as well. But thank you very much, Richard. Really appreciate your time and all of your insights, buddy. I really appreciate it.
Pleasure as always, James. Thank you very much for having me on here. Really appreciate it.
Well, best luck with your next exam, guys. And of course,
guys, best of luck.
Keep enjoying advanced taxation. Cheers.
Thanks, guys. See you later.